What's up? So basically in this video I'm gonna be going over what liquidity is, and after I go over what it is, I'm going to log in a trading view and show you examples of liquidity and liquidity being swept. So yeah. So what liquidity is? Liquidity is a collection of buy and sell orders that are waiting to be executed in the markets. Every trade in the market needs a buyer and a seller. When traders place a stop loss, take profits, or pending entries, those orders does not get executed immediately. Instead, they sit in the market waiting at a specific price. All of these waiting orders together are what we call liquidity. Liquidity is essentially money that has not been exchanged yet, but will be exchanged once price reaches it. When price approaches an area with a lot of liquidity, it is like a magnet. That area contains many stop losses and pending orders, which means there is enough volume for large traders to enter or exit positions. As those orders get filled, prices push forward. This is why price often accelerates near highs, lows, and obvious levels on the charts. So that's basically overcomplicate what liquidity is. Basically, all liquidity is where money rests at in the market. You feel what I'm saying? And market has to take out that money, fill those orders in order to go where market actually wants to go. So that's all liquidity is. This is why liquidity matters. Liquidity matters because price can only move when buy and sell orders are available to be exchanged. When there are few opposing orders, price struggles to move and often consolidates or ranges. So basically what that is saying is, so say 100 people buy NASDAQ, boom, and say only 10 people sell it. Price is going to not move accordingly. It's going to have bad PA. It's going to consolidate, not creating higher highs, higher lows. It's just going to consolidate due to the fact it's not balanced. People have to sell in order for the buy orders to get filled, and people have to buy for it in order for the sell orders to get filled, if that makes sense. I know this is overcomplicating it, but it's really not that hard to understand. I'm going to point it out. It's really not that hard. And when there is a large amount of liquidity at price levels, many orders are triggered at once, allowing price to move quickly and with momentum. Because large market participants need liquidity to enter and exit positions efficiently, price naturally moves towards area where liquidity is concentrated. Liquidity does not just allow price to move, it determines where price goes and how fast it moves. So yeah, this is what buy side liquidity. In this picture, I'm showing you what a liquidity sweep is, but yeah, this is just what a liquidity sweep is. So buy side liquidity refers to buy orders that are sitting above the current price. These buy orders usually come from traders entering loans on breakouts, and from short sellers placing their stop loss above highs. When price move above a high, those stop losses and breakout buys are triggered, creating buy side liquidity. So this is what a liquidity sweep is. So basically, when a liquidity sweep happens, you want to see price continue lower, and you can't just enter trades blindly off liquidity. That is just another confluence. It's just another confirmation that price wants to continue down. Sell side liquidity. Sell side liquidity refers to sell orders that are sitting below the current price. These sell orders usually come from traders entering short on breakdowns, and from long traders placing their stop loss below lows. When price moves below a low, those stop losses and sell entries are triggered, creating sell side liquidity. So this wick right here created sell side liquidity. It ended up getting swept, and when sell side liquidity gets swept, you want to see market go higher. But I'm gonna break this all down on the chart. You feel what I'm saying? But this is just explaining what it is. So what is a liquidity sweep? I just went over what a liquidity sweep. A liquidity sweep happens when price moves into an obvious high, low in order to trigger stop losses and collect orders. This move often looks aggressive and convincing, usually temporary. Once liquidity has been taken, price often reverses and moves into its true intended direction. So like I said, boom, you see this is the sell side liquidity, where this line is. Once price traded below this sell side liquidity, what you can expect price to go higher into its true where price actually wants to go, if that makes sense. So with this buy side liquidity, you see buy side ended up getting swept. When it got swept, you see price continue lower. So not just taking trades on liquidity sweep. So like I said, traders should not enter trades directly at liquidity levels. Instead, liquidity should be used as context to understand why prices move. The correct approach is to identify where liquidity is resting, wait for it to be taken, and then look for confirmation, such as structure shift, fair value gaps, or divergence before entering a trade. So yeah, I'm going to point this out on the charts because this kind of did overcomplicate what liquidity is. I just wanted y'all to have a basic understanding on what it is. Boom. So this right here, this is considered liquidity. Right here. Bang. What you will want to see right here is, boom, price trade back up into this liquidity, sweep the liquidity, and then continue lower. That's liquidity is not overcomplicated. I can show you sell side liquidity. This right here, bang, sell side liquidity right here. Boom. When price swept this liquidity right here, you can expect, boom, price to sweep it. This is like manipulation. Expect price to sweep it and then continue higher until where it actually wants to go. And probably what will most likely happen, boom, swept this sell side liquidity, continue higher, sweep this buy side, and then continue lower. Because in order for price to move into where it actually wants to move, it has to sweep liquidity. You feel what I'm saying? But liquidity is nothing but another confluence on top of other confluence to get confirmation on where price wants to move. Yeah, so that's basically what liquidity is. And if you still struggle with liquidity, I can point it out. Boom, liquidity right here. Right here, bang. This buy side liquidity right here. Bang, buy side liquidity got swept. Bang, when it got swept, what can you expect? Price to continue lower. Bang, more liquidity. Bang. Once this liquidity gets swept, what you can expect? Price to continue lower. You feel what I'm saying? So don't directly and blindly enter trades just off liquidity sweeps. You have to pair stuff with it. I'm going to teach you my model. Well, it's not necessarily my model, but I'm going to teach you the model that I trade so you can pair stuff with liquidity. So yeah, that's the end of the video. And yeah, if you have any questions, you can simply DM me on Discord, or I'll start a live chat and we can go over it and chat so you can get more knowledge on it. But that is basically what liquidity is.